Hey there, today I'm speaking on one of my most favorite strategy cause of how simple it is. What it does is it keeps you in a trade during uptrend, and as soon as the price drops and it goes in a downtrend, it keeps you safe out of the trade. This strategy works beautifully on both long term as well as short term trades. Anyways, I'll start with the long term first. So what I'm gonna do is I'm gonna demonstrate how the strategy works on a stock that I've selected, that is Kajaria Ceramics. As this stock has been through different market condition, it has a good uptrend, there's a downtrend here, it has a good stretch of sideways market and another downtrend here as well. And once I'm done showing how this strategy works, I'm going to spin my watch list and randomly pick a stock to try the strategy on, just to show how this strategy can work with any stock in any market condition. Alright, let's start with a stock that I've picked, Kajaria Ceramics. We are gonna go to indicators, type moving average, and then in settings make the length 50 days. This is the only indicator we require. So how the strategy works is very simple. In the daily time frame, whenever the candle closes above the moving average line, we enter the trade. And when it closes below, we exit. So we enter here, and when it closes below, we exit here. So we would be taking a whooping 23% using a very simple strategy. So we do the same thing again. We enter when it closes above the line and exit here. That is another 11%. So again we enter here, exit here, and we would be taking 3%. So if you see, it kept us in the trade throughout the uptrend, although we had to re-enter 2 or 3 times, but as soon as the downtrend began, it closed below the line and we left the trade. So it worked beautifully in the uptrend and kept us safe during the downtrend. Now here in the sideways market, we do the same, and we might not earn as much as we exit with a little profit, and even when we lose, like here, we lose very little. And again the cycle repeats, it keeps us safe during the downtrend and we take big profits during the uptrend. So I've used this strategy and as well as backtested it on many stocks, and on average it doubles or triples the investment in a span of 2 years. Now just so you know how much we can exactly earn or lose using the strategy, let's say we start with 100 rupees. Here in our calculator we have 100 rupees. Alright, so let's say we start here, we enter in our trade here and we exit here with a profit of 24%. So let's add that plus 24%. Right. Now we have 124. Again we will re-enter over here. So we will re-enter here and we exit with 10.67%. So we'll add that plus 10.67%. Alright. Now again we will re-enter over here and exit over here with a profit of 2.75%. So we'll add that plus 2.75%. Okay. Now next we will enter over here and exit over here with a profit of 3%. So we will add that plus 3%. Alright, and next we will be entering over here. We will be taking a small loss of 1.48%. So we will deduct that minus 1.48%. Okay. Now next we will be entering over here. And again we'll be taking a small loss of minus 1.94. So we minus 1.94%. Okay, and our next entry will be here. Again, we'll be taking a loss of 3.3%. So minus 3.3%. Okay. And our next entry would be after the downtrend. It keeps us out of the downtrend. So our next entry would be here. And oh wow. This trade is still going on in a beautiful uptrend of about 165% so far. So we will add that 165%. Wow, that is 359 rupees. From 100 rupees in a span of 2 years, we now have 359 rupees. We have more than tripled our investment in just 2 years. Now, this is a stock I've selected just as an example on how this strategy works. To show you this can work on any stock in any market condition, I will spin my watch list of over 100 stocks and randomly pick a stock and try the same strategy for 2 years. Okay, so Affle. So today is Feb 20, 2021, which means we will have to go back till Feb 2019. Oh, this is a new stock. Never mind, we will start here. Okay, so let's start again with 100 rupees. We'll start fresh and see how much this stock can get us. So we will be entering over here when it crosses the line, and here it crosses below. We make a small loss of minus 1.72%. Okay, 1.72%, and here we are left with 98. So we again enter here and another small loss of 2.68%. Let's deduct 2.68%. Okay, we are left with 95, and we will again be re-entering here, and we will exit here when it closes below. That is 7.79% profit. So let's add a profit of 7.79%. Okay, all right. So again, it protects us from the downfall. We won't be trading during the downfall, and here we'll be taking our trade. It still didn't close below. It still didn't close below here, and it closes below over here. That is a massive 102%. So let's add 102%. Okay, all right. Now we would again be entering over. We would be entering here when it crosses the line, and it closed below over here. That is 29%. So let's add 29%. Okay, and immediately the next day again we re-enter in the trade, and it's still going on for about 38%. So we'll add that. So let's add 38%. We have 370 rupees. This is more than triple. And all of this is in just a span of little more than a year. We started at December of 2019, and now it is Feb of 2021. So that is exactly 1 year, 2 months, and now we have 370 rupees. Now, I don't think this is a fair comparison, as this is a new stock and new stocks generally have an initial boost. So let's spin the watch list again and select another stock. If it again lands on a new stock, I'll respin it. Okay, so here we go. And Tata Elxsi. Okay, so here we are, Feb 2019, and we can start here. Let's reset the calculator to 100. Okay, so we start here, we enter the trade here, and we lose a bit in the beginning, 2.27%. So minus 2.27%. Okay, and yeah, we are gonna lose here again. We re-enter the trade here and we lose another 2.88%. So we deduct 2.88%. Okay, we are now left with 94 rupees. And we are gonna have another loss over here of 6.23%. This is a little big loss. Okay, oh my bad, 6.23%. Okay, now we are left with 89 rupees, but our uptrend started and we take it actually doesn't close below over here, it closes below over here. We take 43%, so let's add 43%. And all right, so we again re-enter over here and we again lose a little, that is minus 0.77%. Okay, and it saves us here from the downfall. We will be re-entering here and we will again be losing another minus 6.99%. Minus 6.99%. Alright, so we will be entering here once it again crosses the line and we have a beautiful uptrend. It closes here below the line, so we will exit here at a profit of 96%. So let's add 96%. Okay, and again immediately the next day we will re-enter the trade and it's still going on at 66%. So let's add 66%. Okay, wow. We have 382 rupees in a span of exactly 2 years. We have almost multiplied our investment by 4 times. So this is a long-term strategy. Like here, there are times when you will be in a trade for 7 to 8 months in a stretch. And not that it's a bad thing, like if you see here, from May till December, it has nearly doubled its value. But for those who are looking for short-term trades, who want to keep rotating their money and investment, that's when instead of 50 days moving average, what you will be needing is 20 days moving average. So let's add another moving average, and this time we'll keep the length for 20 days. And we'll change the color too. So if you notice, it works the exact same way, except every trade is for a much shorter duration and also you get to exit much closer to peak rather than when it comes down. But the issue with 20 days moving average is you gotta enter and exit quite often. So instead, for short-term trading, what you can do is enter when it crosses the 50 days moving average and exit when it crosses the 20 days moving average. So you enter here when it crosses the 50 days moving average and exit here when it crosses the 20 days moving average. Again, enter here and exit here. So you see, it's nice and quick. In a span of 26 days, you earn 22%. Now, of course, there are times when you miss out on a trade because the 20 days moving average asked you to leave early. It has its pros and cons. Personally, I prefer long term, as statistically there are more billionaires who are long term traders than those who are short term traders. But again, it depends on your trading style and the way you manage your funds. Alright, before you go out there and implement this strategy, there are 2 important key points to remember when using this strategy. 1. Stick to the same stocks. You should always pick stocks and stick with it in spite of losing few initial trades. Like if you see here, I take a trade and it goes in a loss. Again another trade and I lose here as well. So if I keep changing my stocks after 2 or 3 losses, I'll miss on the wave of uptrend when it comes. So pick few stocks and stick with it. I made a beautiful video on how to pick the best stocks. I'll link the video on top and in the description. So do check it out. Okay, second point. Wait for the candle to close. Always wait for the candle to close above or below the moving average line. I made that mistake plenty of times where I see a stock crosses the line during midday. I take the trade and by the time the market closes, the price closes below the moving average line. So what you can do is wait until the last 5 or 10 minutes before the market closes, and if it still crosses the line, then take or exit a trade. So hope you like this strategy, and if you did, please do drop a like as it really motivates me to make many more wonderful videos, and do subscribe so you don't miss on any of the mind-blowing videos coming soon.